Thank you so much for joining us with the Landlord Academy and Bryan Chavis from bryanchavis.com. Today, what we are going to talk about is a portion of our masterclass that we're putting together. And in real estate investing, we've got single family homes. We've also got multifamily residences. And Bryan is going to explain to you that there is a huge difference in why you should be looking at multifamily versus single family. So Bryan, thank you so much for joining us, man. And I'd love for you if you could provide an overview of the benefits of investing in multifamily versus single family homes.
Yeah, absolutely. And where do you start? But let's start with with most individuals are going to be just starting out. For those just starting out, they're looking at probably going to RIA groups and organizations and rubbing elbows with a lot of other investors. And obviously the deal of the day is typically something in the realm of a single family home that's being advertised by a wholesaler or a flipper or something of that nature. This is a great buy and hold strategy. It's typically the pitch. But the major difference is why, you want to kind of really jump right on into multifamily because at the end of the day, you're benefiting from the economies of scale. And what that means, that it means a lot, but, kind of just to sum it up in this 3 to 4 minute content drop, and really get to the meat of it is really, if you have a duplex and you have a single family home, investor A has a duplex, investor B has a single family home, investor A has a vacant unit, and investor B has a vacant unit. What are the occupancy rates or the vacancy rates? Investor B is 100% vacant, while investor A is 50% vacant. Investor A shaved off 50% of his risk by owning a duplex versus a single family home, and they probably are roughly right around the same price, depending on where you can pick up some of these properties. Obviously, you can get duplexes roughly around the same price you can get some of these single family homes. So ideally, you want to benefit from the economies of scale. And the same thing as when you move into the more advanced syndication, like I'm doing, I found out quickly, buying 40 unit, 50 unit apartment buildings, it's a lot tougher to make that work because of the economies of scale when it comes to employment, and having and being able to staff that. So, that's going to be tricky for you as a syndicator. Typically you want to take down the larger deals because it has the in-house employment built right into it. So, built into the underwriting. So at the end of the day, it makes it a lot easier. And, then I can step in as an asset manager and not have to, if it's a 40 unit, I may be out there doing the property management myself as a smaller syndicator until I scale up. So, and there's nothing wrong with that because I tell you what, you learn a lot.
Right.
But, ultimately, if I'm getting into this to own for long-term wealth building, I'm not doing the single family homes, not at all. There was a time where, it was like, well, that's all you can do. The barriers of entry, 4 or 5 years ago, that's all everyone was preaching. Hey, look, if you don't have a lot of money, get started with single family homes. Now with syndications and the ability to start property management companies, with minimal education and training, there's no reason to really start at that single family level. In my opinion, you can scale right into what they call the, monopoly, 5 greenhouses, 1 red hotel. I would just jump right into the red hotels. I'd get right into the multifamily, skip the single family, avenue. That would be my advice.
Right. So quick question. So about the expenses of actually owning a single family home versus multifamily, it seems like you could spread that out over the course over a multifamily property,
Yeah. And, and to the single family Nate credit, you can also put those charges, those repairs on the cost of the tenant with single family rentals. So it's not, I wouldn't say it's tick for tack as far as, the repairs, but, people may look at owning apartments like, oh, wow, now, it's 50 units. That's 50 different units that I've got to worry about repairing. No, it's a little cheaper than what you might think because of the economies of scale. Now, again, the person that has a single family home, he can get by with, not paying any expenses and putting those expenses off in his lease. If his lease is well written, to the actual tenant, up to $200, $300, the tenant's responsible for all repairs. You see that in many well-written leases. So, deferring the maintenance to the tenant, is something that's possible in single-family homes, not so much possible in the multifamily sector. But, at the end of the day, if we're talking about building wealth, like we were talking about in the last segment, it was once told to me, and I forgot how it came up, but it's something that has always stuck with me, and that I always use for a reference. It's like a boxing reference.
Right.
If you're boxing or you're in a street fight, the more moves it takes for me to deliver my blow to your jaw, the more accessible I am to a counterpunch.
Right.
So if you're talking about 5 green houses, 1 red hotel, or in this case, 1 red apartment building, that's 5 moves. If we're trying to get to the wealth of the red apartment building, the more moves it takes to get there, the more accessible or subject you are to economic downturns, economic headwinds, to being wiped out. So if I can reduce my amount of moves, it also reduces my amount of risk. And I think that, to me, is in the economies of scale, and benefiting from those economies of scale, to me, is making multifamily far more attractive than the single family. Just the sheer ability to do 2 or 3 moves and to increase one's net worth tremendously. I mean, you've seen me do it, after being sick and coming back. 1 apartment building can put my net worth, 1 project puts your net worth, you're equal to some
Right.
professional doctors and attorneys. You can do 1 move and be somewhere at $250,000 with just 1 small move.
Right.
4 moves in a time frame of a year, and you're over $1 million in net worth. Now, now you're able to, you have more borrowing power. Now you're able to refinance certain projects and cash out and pay yourself. It's the ability to build that wealth. Really, at the end of the day, can only, in my opinion, it's done through real estate, and then it's accelerated through through owning commercial property like multifamily.
Right. And I've seen you manage Park Plaza, and, I would say it's easy, but being able to manage all of those units in one place versus having to go to 16 to 20 different single family homes. You're talking about making moves.
Yeah.
Portfolio of single family homes, you're going to be driving all around town.
All day. It's management intensive. And I'm going to be honest with you, the management levels or skill sets are not that great at the single family level.
Right.
So, if you trust your investment property to a local property manager, at the end of the day, it's, for what they're charging you, the level of service, and hopefully you're getting great service. But all the way around, all the way across the board, it's just much easier these days to own and operate apartment buildings. And then if you don't have 2 nickels to rub together, it's easy to kind of really understand the apartment wholesaling side of things, to where you can come in with no credit, no money, and wholesale 1 or 2 deals. And in your spare time while working full time, wholesale 1 or 2 deals, and then be sitting on enough money to actually go and make some moves. Whether buy a duplex or a quad for yourself, or start a syndication. You pay a syndication attorney. I think the going rate is somewhere roughly right around $25,000. I'm just saying the weighted average of the services to help you create an exemption, a file for an exemption, a 506B or C. Of course, you want to speak to your tax advisor and your attorneys when doing this, but because it's very top heavy on the legal ramifications. You need a great attorney and a good accountant. But at the end of the day, you wholesale 1 or 2 deals, and now you have the money to put together your own syndication and start. And if you've already wholesaled, that means you've already have a basic understanding how to underwrite and how to evaluate markets. So now you're just going to the next level from wholesaling to syndication. And then of course, if you've taken our courses, or you're taking our courses, our coaching, as a wholesaler, we're teaching you property management. We're teaching you how to underwrite. So you're learning all the fundamentals to be able to go to the next level. And you level up once you've done 1 or 2 wholesaling deals. You don't go out and buy yourself a brand new car, or go out and take that vacation. You put that money back into your business, and you move from just wholesaling to now also having a syndication division. And you go after taking some deals and taking ownership in those deals. So now you look for limited partners. You put yourself in a position of a GP, which is a general partner, and you build your waterfall structure on the back end so you're able to get paid, and you have an equity position and a waterfall position on the back end so you're getting paid from cash flows. And now you're well on your way to building wealth. Now you have that ownership, what we talked about in the first segment not too long ago, about the difference between being rich and being wealthy. This is the difference. The process doesn't happen overnight, as you well know, because
Right.
you've seen me having to fall, after being sick and start all over again. You've seen me in the struggles. It doesn't happen overnight, but man, it does happen. And the one thing that, I can say is that once you have this knowledge, then no one can take it away from you.
That's right.
This you have the knowledge. Numbers don't change. The mathematical system has been around for quite some time. The numbers are not going to change. The need for affordable housing is not going to change. Now it's just, we're just really talking about how to accelerate the business. You can do single family. And I'm not going to say there's a right, or I won't knock you.
Right.
We're just talking about how do you accelerate it? How do you go from 0 to 60? And if there's a way to go from 0 to 60, then I want to know about it.
That's right. And speaking of knowing about it, this is all going to be in our masterclass, right?
Absolutely. It's how do you accelerate it?
Okay.
How do you use other people? And another thing too that I want to address, if I may,
yeah,
is nowadays everybody's a guru, everybody's an expert, and I think people are on social media are some of them are abusing the platform. Just because you read a book, take a course, doesn't make you a thought leader or an expert.
Right.
And people say, well, you got to have experience. Have you ever heard that? You got to have experience, right? And I disagree with that. I think you have to have evaluated experience. So just because you've experienced something, I know a lot of people, I've talked to a lot of older people twice my age who have experience and are sharp as marbles. It's like they got way more experience than I do, but again, they're sharp as a marble. Just because you've been around and you've experienced some things doesn't mean you've actually learned from those things.
That's true.
How many people have you met, Nathan, that have been around for a long time, but yet they keep repeating the same mistakes? So just because you've got experience in something doesn't necessarily make you a thought leader. What makes you a thought leader is evaluated experience, and then continuous leveling up and using those experiences to take yourself to the next level and to the next level to the next level. So just having experience is not enough. So my point is, just because you've read a book, gone to a class, gone to a seminar or something of that nature doesn't make you a thought leader. What you want to do when you go to these seminars is you want to grab the knowledge, but you also then want to get along align yourself with someone, a mentor or someone who has that evaluated experience. And then what you're using is the knowledge to catapult yourself or allow that individual to help you go to the next level. They might want to do a deal with you. They might, might be something as simple as help you underwrite the deal. It might be, hey, look, they'll go in on this deal for you to help you get your experience. They'll come in and, as an owner, have some sort of equity ownership in the deal to help you get the experience. You're going to do all the work. They're going to kind of, be your mentor and guide you through it. The drill. But the idea is that, hey, look, when you get this knowledge, understand that, especially when you're talking about multifamily, when you get the knowledge, the knowledge is important, but you also want to make sure you're putting yourself and surrounding yourself with a team, that can help you level up, and experience a team, and a team that has a track record. So, that's something that is extremely important, in this day and age of instant thought leaders and instant gurus. You just want to make sure that you find someone that is actually a practitioner and has that evaluated experience.
Right. Absolutely. And, I won't make you brag about experience and expertise, but we do have an amazing team here at the Landlord Academy, syndication attorneys, not to mention Bryan Chavis himself being able to work alongside you and help you evaluate deals. I've seen people transition themselves from, not having any properties to being full-blown investors. And so, yeah, it's really important to align yourself with the right teams. Make sure you visit us at bryanchavis.com. You can learn about coaching opportunities and mentorship opportunities. Also visit us at Landlord Academy. There's lots of resources and tools for you to be able to succeed in owning rental property. And make sure you like and subscribe to our YouTube channel. Leave your comments, leave your questions. because we're going to be answering these things for you every single week. Our goal is to make sure that more people own multifamily, more people are becoming wealthy. And, we really hope that you join us on this journey. And Bryan, thank you so much for joining us, man. And look forward to speaking to you again, man.
Hey man, thanks Nathan. Again, love these content drops. I think these are extremely important, man, to flood the social media airways and platforms. Should I say not airways? That's old school radio. But the platforms with real life experience. We're shooting videos. We're not only doing these content drops, but we're out at the properties. You can see me on my Facebook channels.
Right.
I hold a multifamily meetup every month in Tampa, Florida, from which we will live stream from on Facebook and as well as our YouTube channel.
Yep.
So we'll do a live stream. It's 30 minutes. It's great. Meetups. You can also then contact everybody at the meetup. With our Facebook group. So if you hear someone that's speaking, or you see someone that has introduced themselves during the meeting, and you're like, hey, I want to do business with that person, or they advertise a multifamily project that I might be interested in, you can actually contact them through Facebook, through our group. So a lot of exciting things are happening. And these things require nothing but your time and your effort. So, to get around individuals who are actually practitioners, because iron sharpens iron. So, visit us, on our Facebook, visit us on bryanchavis.com, the Landlord Academy / buy it, rent it, profit. We're excited about what we're doing, Nathan. I know, both of us are really excited about these master classes that we're putting together, guys. So I hopefully you join us in the next 3 to 6 months and really, help to find out what the difference is between being rich and being wealthy. That's a wonderful experience.
Exactly. Let's make it a reality. All right, guys. Hey, thank you so much for joining us, Bryan. Talk to you next week.
Talk to you next week.